A very good morning, guys. 30 episodes in, and today's Sensex weekly expiry. Pause that for a second. 30 pre market, 30 prediction sets, 30 morning readings, the chain before the markets open. And today, of all days, is the day where institutional money has already placed its bet on where Sensex closes by 3:30. They have placed it, we just have to read the trade. The Sensex 30th April future is sitting at 77,444. Spot was at 77,525 at the close. That is a 80-point discount. On a green day expiry evening, that doesn't happen unless the institutional book is committed to the pin. Brent cooled overnight, fade came in quiet, gift is gap down 90 points, everything is set up for the pin trade to print. Let me show you the trade. So Sensex closed yesterday at 77,496. The 30th April future closed at 77,444. That is a 80 points below the spot on a day where Sensex was up by 79 bips. Futures trading at a discount on a green day expiry evening is not a noise. Future trading at a discount on a green day evening is institutional money saying we want spot to pull down to where the option chain is loaded. Where is the chain loaded but? The at the money strike is 77,300. That's 196 points below the spot. The straddle at 77,300 is trading around 596. Call premium plus put premium. Implied volatility on the 30th April is around 15.52 and that crushed 6.81% in a single session into the close. And here's the math. One standard deviation, which is how I size expiry day cones, gives plus and minus 746 points range. That sets the wings at 76,750 on the downside and 78,250 on the upside. Spot at 77,525 is sitting 225 points above the ATM strike. The market is paying for the spot to drift down 225 points by 3:30. The pin trade is this. Sell the 77,300 ATM straddle, buy the 76,800 put as a downside wing, buy the 78,000 call as an upside wing. If the pin holds and Brent stays cool and Fed stays neutral, you collect 596 minus you pay roughly 300 points for the wing. You net around 250 to 300 points by 3:30. That is the trade institutions have already paid for. The 80-point future discount is the receipt. So three things are cleared overnight and that makes the pin trade alive. One, Brent crude cooled from 117 on Wednesday's close to 111.67 this morning. That's a $5.46 off the peak in a single overnight session. The crude overhang that was hanging over Indian equities, UAE leaving OPEC, Hormuz heating up, that overhang is unwinding. Not gone, but the heat is off. WTI is at 108. M6 crude closed at 10,110. The macro stress on energy is lighter than it was 12 hours ago, and that takes the worst case tail of the pin trade. 2. Fed came in neutral. US closed essentially flat post-Powell. Dow off 26 basis points, S&P off 4, Nasdaq up 4. Nobody freaked, nobody celebrated. That kills the wait for the Powell pivot. Today Sensex tape stands on its own. It doesn't have to absorb a Fed shock. And 3, GIFT Nifty at 24,163. That's 14 points below Wednesday's close. Mild gap down, not a panic. Asia is already mixed. Nikkei is off 91 basis points. Hang Seng off 1.04%. Kospi up 21 basis point. No regional lean. So the open isn't going to be violate the pin trade with a cascading move. You add it up. Brent unwinding, Fed quiet, mild gap down, no Asia panic. The pin trade lives along that. The 80-point future discount is now the highest conviction signal on the screen. Yesterday the 24,200 line was the call. Yesterday the high printed was 24,335 on Nifty. So technically 24,200 was broken. But this is where the framework redeemed itself. Calls at 24,200 didn't get liquidated. They migrated. 24,500 added 2.46 million contracts of fresh call open interest because the new mega wall on Nifty. And at the same time, 24,200 added 2.6 million contracts of fresh put open interest. The writers turned yesterday's ceiling into today's floor in the same session. That is the difference between a wick and a regime chain. The tell isn't the break, the tell is what the writers do after. Did they reload at the same strike? That's a wick. Or did they migrate to a hard strike and flip the old strike into a put defended floor? That's a regime change. Both happened yesterday, clearly a textbook play. That's regime change matters today because it sets the Nifty floor at 24,000 to 24,200, while the Sensex pin trade plays out at 77,300. Nifty has 24,000 as the magnet, 24,500 as the new wall. So Sensex pin doesn't have a Nifty crash flowing into it. The Nifty side is supportive of the Sensex pin holding today. Pros reset confirmed. Pros index futures Tuesday had 960 contracts. Wednesday they had 8,000 long contracts. Pro index called Tuesday minus 9,000 short. Wednesday plus 56,000 long. 66,000 contract swing in one session. Pro is back and they are doing the long trade in May series. FIR pair trade is still load bearing. Stock long book is at 8.29 lakh contracts. Index short at 1.72 lakh contracts. Ratio stands at 4.83 is to 1. Expanding via both leg streaming. Pair trade managed actively, not unwinding. Client is max bullish as always. Long calls 1.55 lakhs, short puts 5.53 lakhs. Crowd at peak euphoria into yesterday's 1DT trade. The contrarian warning is loading, but on a pin day, the pin is the trade, not the contrarian fade. My POV unchanged from last few days. Buy on dips with hedge. Mean reverting tape, sell on rise also works if the pin holds. Premium sellers win the day. If someone breaks the pin, you fade the rip both ways. Don't pick direction, read the structure. The hedge is mandatory always, especially today on a Sensex expiry. IV is cheap. Sensex implied currently closed at 15.52. 3 weeks ago, VIX was 25. The same hedge costs 3 to 4 times more. So don't skip the hedge if you're carrying something overnight. Rupee case Nifty 10 3-day post rebalance. Wednesday minus 4 basis point against Nifty's plus 70. 66 basis point drag for the day. Reliance, Maruti, ITC, M&M led the index. None in the portfolio. Since rebalance, plus 13 basis point alpha against the benchmark is what it is currently standing. Net return stands at around 82.31, annualized alpha at 13.07. Next rebalance happens on 25th May. So 30 episodes in, I started season 2 in the start of March. We are 4 months, 4 weeks into it. The framework, pro before FIS, before client, walls, floors and migration, and gates, macro overlays, prediction trails, graded in the morning framework. Has been right on direction on sometimes, it has been right on levels on sometimes, and that's been the calibration story all month. Tighten the levels, don't tighten the framework. This morning the framework is reading Sensex pin trade with a 80-point future discount at the opening. We'll know by 3:30 whether 77,300 holds or not. If this episode landed for you, the only thing I'm asking is drop a rating, guys, on Apple Podcast or Spotify, wherever you listen. Just 5 seconds, single biggest lever for getting this in front of more traders. So if you like this, give it a thumbs up, and it's streaming live on rupeecase.com as well. So visit Rupeecase to listen it live. So episode 31 lands on Monday morning. Tomorrow is Maharashtra Day. Friday markets are closed. So see you all once again on Monday. Have a happy expiry, guys.